Ever wondered how to transform $10,000 into a $1 million investment portfolio? What if I told you that this investment could potentially grow to $5 million? Sounds like a dream, right? Well, this dream can become a reality with 3 solid dividend REITs. In this video, I'll show you and John 3 of the absolute best REITs currently on the market. I'll break down their business models, financial performance, and future prospects to understand how these investments can help you achieve your financial goals. I'll show you a REIT that has the potential to pay over $80,000 in monthly dividends. And in the end, I'll show you a portfolio of the 3 best REITs that has the potential to make John a multimillionaire and pay over $350,000 in annual dividends. Now, before we get into the specifics of each REIT, let's talk about how I selected them. Investing isn't just about picking popular names, it's about making informed decisions based on solid criteria. Here's how I chose my top 3 REITs. First, I look at dividend yield. A high yield means you're getting a good return on your investment right from the start, but it's not just about the yield today. You also have to consider dividend growth. Consistent growth indicates a REIT's ability to increase payouts over time, which is crucial for long-term investors. After that, you need your investment to also grow in value by means of share price appreciation. For this, you also have to consider the 10-year average share price appreciation. Based on these criteria, coming up next are the 3 best REITs ranked from the good to highest value addition to your portfolio. Starting at number 3, we have Extra Space Storage. Known by the ticker symbol EXR, Extra Space Storage is a fascinating player in the world of REITs. This company has carved out a niche in the self-storage industry. Now, you might be thinking, self-storage? Really? But this sector has been booming, and EXR is leading the charge. Extra Space Storage operates over 3,500 facilities across 43 states, making it one of the largest self-storage companies in the U.S. Their business model is simple, yet highly effective. They provide secure, clean, and convenient storage solutions for both personal and business needs. So, let's dig into the numbers. EXR currently has a dividend yield of 4.33%, which is quite impressive. But that's not all. The real return lies in their dividend growth rate, which stands at a robust 15.01%. This means your dividend payouts are not only stable, but also growing significantly over time. And there's more. When we look at the 10-year average share price appreciation, EXR shines with an impressive 10.9%. This indicates that the stock price has been growing steadily, adding substantial value to your investment. To give you a clearer picture, let's look at the future projections. If John invests $10,000 in EXR today, in 1 year, his investment is projected to grow to $11,523. Not bad for a year, right? Fast forward to 10 years, and you could be looking at $44,578. Keep that investment for 20 years, and it could grow to a nice balance of $247,814. And if you're in it for the long haul, after 30 years, your initial $10,000 investment could balloon to an astounding $1,899,993. That's almost $2 million from a starting investment of $10,000. And let's not forget about the dividends. After 30 years, you'd be receiving $212,120 annually in dividends, or about $17,677 every month. The total value added to your investment would be around $1,889,993, with $909,660 coming from capital appreciation and $980,333 from reinvested dividends. It's clear that EXR not only offers solid immediate returns, but also positions you for significant long-term gains. Analyst sentiment is also in our favor. The quant rating for EXR is a solid buy, which is also backed by Wall Street analysts. Even Seeking Alpha analysts give it a hold, indicating a general consensus of its strength and potential. These ratings reflect confidence in EXR's business model, growth prospects, and overall market position. Next up, at number 2, we have another promising REIT, Rexford Industrial Realty, known by its ticker symbol REXR. This REIT focuses on industrial properties, specifically in the Southern California market. Now, why is that a big deal? Southern California is one of the most dynamic and high-demand industrial markets in the world. With the constant stream of goods flowing through places like the ports of Los Angeles and Long Beach, it's a logistics powerhouse. Rexford Industrial owns and operates a huge portfolio of high-quality industrial properties, including warehouses, distribution centers, and light industrial facilities there. These assets are strategically located near key transportation hubs, making them extremely valuable for businesses that need to move products quickly and efficiently. This prime real estate positioning not only ensures high occupancy rates, but also allows Rexford to command premium rents. As for the investment metrics, the current dividend yield for Rexford Industrial is 3.79%, which might seem modest compared to some high-yield REITs, but it's the growth that really matters. REXR has an impressive dividend growth rate of 16.79%. This rapid growth indicates that the company's not only committed to rewarding its shareholders, but is also generating increasing amounts of cash flow to support these payouts. Looking at the historical performance, the REIT's 10-year average share price appreciation is an outstanding 12.09%. So what does this mean for your investment? If John put $10,000 into this REIT today, his investment is projected to grow to $11,588 in 1 year. Over 10 years, that investment could grow to $47,209, which more than quadruples the initial amount. Fast forward 20 years, and you could be looking at $280,989. And if you're thinking really long-term, after 30 years, that $10,000 investment could potentially grow to an impressive $2,387,661. Paying $271,115 annually in dividends, which translates to about $22,593 every month. To break it down, the total value added to your investment would be around $2,377,661, with $1,195,802 coming from capital appreciation and $1,181,859 from reinvested dividends. If you think this is good, wait till you see the top REIT that has the potential to double this valuation. And in the end, I'll show you a portfolio of the 3 best REITs that has the potential to make John a multi-millionaire and pay over $350,000 in annual dividends. Analyst sentiment further reinforces the strength of REXR. The quant rating is a hold, indicating cautious optimism. However, Seeking Alpha analysts rate it as a buy, and Wall Street analysts also give it a buy rating. This positive outlook from experts suggests confidence in Rexford's ability to continue delivering strong performance and shareholder value. Okay, quick reveal. If you're wondering where I get all that data from, let me tell you about our channel's official partner, Seeking Alpha. It's been my go-to tool for winning in investments. It's easy and simple, and I love how I can access under-the-radar investing ideas, earnings call transcripts, and breaking news. Plus, the exclusive database stock ratings have been a game changer. Stocks rated strong buy and their alpha picks have beaten the S&P 500 by over 80%. So, do yourself a favor and check them out in the description. As a bonus, they've promised to give a 20% discount on premium membership, with a 7-day free trial and a 10% discount on alpha picks to those in our community who join using the link from the video description. Now, back to our video. Let's take a look at our top REIT pick, CubeSmart. This REIT has some impressive numbers and a solid business model that you'll definitely want to know about. Known by its ticker symbol, CUBE, CubeSmart is a leader in the self-storage industry, operating a massive network of storage facilities across the United States. The company's business model is centered on providing convenient and secure storage solutions for both personal and business needs. Whether you're looking to store household items, business inventory, or even vehicles, CubeSmart has a facility to meet your needs. CubeSmart's extensive reach with hundreds of locations strategically placed in high-demand areas ensures a steady flow of customers, and consequently, a robust income stream. Their focus on customer service and facility maintenance has earned them a strong reputation, which translates into high occupancy rates of about 90% and the ability to command premium rents. Let's break down the financial metrics that make CubeSmart an attractive investment. CubeSmart currently offers a dividend yield of 4.8%, which is quite compelling, backed by a strong dividend growth rate, which stands at an impressive 15.34%. And with a 10-year average share price appreciation of 8.69%, it becomes clear why CubeSmart is a top choice. This figure indicates steady growth in the value of your investment, adding another layer of return on top of the dividends. Listen, a company that can grow its share price consistently over a decade and maintain a good starting dividend yield is a strong candidate for long-term investment. Now let's talk about projections. If John invests $10,000 in CubeSmart today, that investment is expected to grow to $11,349 in 1 year. This initial growth is promising, but the long-term projections are where CubeSmart truly shines. Over 10 years, the same investment could grow to $41,190. Fast forward 20 years, and you might be looking at $279,104. And if you're in it for the long haul, after 30 years, your initial $10,000 investment could balloon to an astounding $4,571,595. Paying $1,015,882 in annual dividends, which breaks down to approximately $84,657 per month. The total value added to your investment would be around $4,561,595, with $1,158,911 coming from capital appreciation and $3,402,684 from reinvested dividends. So the question is, should you just invest all your money in Cube? The answer to that is no. Investing in these REITs is a great opportunity, but like any investment, stocks have risks, and you cannot put all of your eggs into one basket. To minimize these risks, diversifying your investment is crucial. That's where the portfolio comes in. If you choose the REITs mentioned above and invest an equal amount in each, you can calculate some key metrics to assess your portfolio's performance. All you have to do is add the respective yield percentages and divide by 3, and you'll have your portfolio's average dividend yield, dividend growth, and annual growth. For this portfolio, we'll get an average current dividend yield of 4.31%. A strong dividend growth rate of 15.71%, and an average annual growth rate of 10.56%. So based on these metrics, let's say John invests $10,000 in this portfolio of REITs. In 1 year, this investment is projected to grow to $11,487. Over 10 years, it has the potential to grow to $44,161, which more than quadruples your initial amount. Fast forward 20 years, and you could be looking at $263,812. In 30 years, the $10,000 investment has the potential to reach a value of $2,546,624 and pay $365,023 in annual dividends, which breaks down to about $30,419 every month. Not quite over $80,000 like our last REIT, but definitely safer than investing everything in one stock. In total, the total value added to your portfolio after 30 years would be around $2,536,624. This includes $1,036,689 from capital appreciation and a solid $1,499,934 from reinvested dividends. Now, if you like dividend stocks, especially those trading at their 52-week low with the potential to turn a $10,000 investment into over $7 million, click the video on the screen.